Okay, good afternoon, everybody, and welcome to this edition of Ask the Experts. My name is Carl Capolingo. I'm the market analyst over here at Think Markets Australia, and it's a pleasure to be with you as we delve into the depth of your portfolio, turf out the losers, keep the winners, and maybe pick a few more. We will do this after the disclaimer, which says that everything we're going to discuss today is very general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general advice, you should consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important. You should read it or head to our website and download our product disclosure statement. Apart from that, it is pretty straightforward today. You have a chat window somewhere there on your Zoom, if you're joining me on Zoom. If you are joining me on YouTube, I will keep track of you as well and your posts, or you can tweet me, or if you're on LinkedIn as well. Any which way you can, send me a message and I'll do my best to give you a technical and fundamental reader on that. Let us head over to the charts and might do a quick whip around the grounds only because I didn't do the usual Monday weekly analysis session yesterday. And that's because I've been on leave. So why didn't we do Ask the Experts last week? I was on travel, had a couple of wonderful days, brought my family with me on a bit of a working holiday to Sydney to do the AusBiz spot over there with Koshi on the call, and then down to Melbourne for a couple of office days with Think Markets. Beautiful offices they have there at 357 Collins Street. And then the Christmas party at Think Markets as well, and then a couple of days around the bay of beautiful Melbourne, and the weather was pretty good. It's pretty horrible back here in Perth, back home. Okay, I can see everything. Let us do the NASDAQ very quickly. Since we last spoke, it's 2 weeks ago, and we're kind of thinking that stock markets had a run ahead of them. We knew that the first 2 weeks of December could be a little bit rough based upon the seasonal analysis I produced for you. And then we were thinking the end of December, historically, that's a very good time of the year. And true to plan, this is pretty much what this December has been doing. We are bumping around in a bit of a range here between, say, 11,000, 11,500 on the NASDAQ. The down days, I think, have been fairly benign, fairly modest, and the up days, there's still enough in there to keep us going. So neutral within this broader picture of this very well-established long-term downtrend. I think anybody can argue that this is still a bear market on the NASDAQ. We're still seeing resistance where we should see resistance around that 11.6, 11.5, as I said. On the support side, if we see a break of 10.745, I think this idea that this Santa Claus rally is still coming, that might be under some pressure. And certainly, hey, if we're below 10.262 or 10.088, it's probably more of the same in the bear market. There has been this massive value versus growth trade. That was growth. This is value. This is the Dow Jones, the 30 biggest companies in the world, very defensive earnings through the cycle. And we know that fund managers have to buy, they're mandated to buy because money keeps rolling into the coffers. They've got to get into the market because X amount is mandated for equities. And that's why value had this huge run over growth. Value has pulled back. We know that start of December, a little bit weaker, but it has hit a zone where I do expect there to be some demand. That's that light green zone. And we saw it manifested last night with a really strong white candle, which I think does set the tone for this rest of December. That is, we can see some upside there. We're not all out of the woods though. I'm a little bit concerned that these long-term downtrend zones, say on the S&P 500, I know we're talking a lot of US stuff here, could still be reinforced. Okay, we saw the NASDAQ was weaker, and then the Russell 2000, so the 2000 smaller capitalization stocks in the US. There we can see probably the weakest of the lot, and that's a little bit concerning. So we're seeing a rejection here. So I wish I could give you some clarity. I can only give you clarity when there is clarity, and we are seeing from the charts, if anything is clear, it's that nothing's clear. If this can push up above, say, 1900, then that Dow Jones strength, I think, is valid and will be reinforced by a broader US equity rally. If we start to close below 1757, then this will be questioned, I think. The other thing I think you need to know is watch out for, if I'm not around, sort of X marks the spot, what happens in here. And many times we talk about this pattern in these sessions where we are looking for something that looks a little bit like this, and I wish it wasn't green, but it doesn't matter. You get the picture. So if I am going to label some of these, let me change the color. So let's call this point A, point B, all right? And then that's used with the sound and audio if you're on one of the streaming services. I've just had a message come through, but it looks like it was rectified pretty quickly. So our supply side candles, what do they look like? Let's do that, copy, paste, and let's make this a little bit bigger. So something like that, or the other one looks like this with the upper shadow, okay? So these are our supply side candles. And we're especially concerned about those when we've got a lower point of supply, okay? In brackets, peak. Okay, so we're watching for what's happening here. X marks the spot, and we picked the Dow Jones because that's the one that's really leading the race. Well, very quickly again, whipping around the grounds, we've seen a huge rally in China because they are actually starting to make some progress on that reopening. My big concern, and I voiced it on Friday, is that, well, here's some stats for you. 2/3 of Australians got COVID. What if we're 26 million, no big deal, but what if 2/3 of Chinese people got COVID? What does that mean for your workforce? What does that mean for your output production? Of course, they'll get to the other side of it. We are as well, but I would suggest it's going to take far longer. And there are reports that their healthcare system is nowhere well placed to deal with that number of infections as we are. So I remain a China skeptic. I must admit, this was a little bit against what I was expecting because I thought they would continue to target COVID zero. Hey, political circumstances changed there. And then we had obviously the property stimulus package as well, which is substantial. And all reports to this point are that it is not having a huge impact thus yet. Okay, back to Australia, and then I'll get to your questions, because based upon what's happening in the US, based upon what's happening in China, that China chart wasn't terrible, by the way. Just looking at the property sectors and the real estate. This one's interesting because watch for that AB pattern in here. So what's going to happen here? Do we see this? That would be interesting for something like an iron ore, which has had a massive rally. So if you're on those iron ore stocks right now, sort of consider that chart there. That's your Shanghai iron ore. Consider, say, this chart here. They're very similar. Okay, so if you're on that iron ore trade, you are betting on the Chinese property market. I'm not so sure that's a wise thing to do. And bringing it back, as I said, to the ASX 200, hey, we're in the light green zone. We're the value trade. We're like the Dow Jones. We're not like the Russell 2000. We're not like the NASDAQ. We're not like the S&P 500. So as long as that Dow Jones keeps powering higher, we can have another look at 73, 76. And as I said, when it gets to 7,600, X marks the spot, I'm going to be taking some money off the table there on my own personal investments. Will we get there? I still think there's a better than even chance that we will. And just to avoid being a broken record, we're going to be watching, aren't we? If I'm not around, if I'm not here on a Tuesday to tell you, we're watching for this now. Okay, great runs, fantastic runs. Demand side pushes are wonderful. What's even more wonderful is we get to see how supply develops as well after we've had one. So this is the key level now. It's going to be above 7,300. It's going to be probably below 7,350, and we'll see how the candles fall in there. Okay, first up on the stocks today is going to be A2 Milk, and this one has come through from the Twitter. I'm sorry, I can't remember who tweeted it at me, but I'm fulfilling the promise. Missy has sent this through. Let's go. A2 Milk coming up. There it is, A2M. Last time we looked at this, I was quite positive. I remember telling Easton, it looks good, mate. Hang on to it. I think it'll come good, and it has. So that's wonderful to see for everybody who might have taken a nibble. You know what I do, right? The first thing I do is grab that red rectangle and draw it across, because I think this is where the supply is going to come in. So that high there, I'll give you the number. Well, it might not be if AMI Broker's kind to me, 745. So this is the level. So let's just type that in there so we all know that 745. This is going to be a major point of supply. This is not just any old POS, is it? This is an MPOS, and we're going to go 7.45 in there. What would I do when I get there? I wouldn't ask too many questions. I don't think I'd even bother looking at candles. I think I'm going to bang out a third and just see how we go with the rest. Now, that might sound a bit drastic, isn't it? Don't even worry about the candles. We get there, just bang out a third. Well, don't forget, you're still plus 2/3. I mean, if this thing just smashes through that level, and think about, well, just say that out loud, A2 smashing through any level. I mean, we know how bad it's been. You still got 2/3. That's fine. But hey, if it peaks out there, throws in the black candles, because the supply comes in and it is an MPOS, then you're glad you got some out. Why are you still holding 2/3? Why wouldn't you just dump the whole lot? Well, because the trend is amazing. Silly. Look at that. And this is turning around as well. So look, hey, you know what? Dare we dream? Dare we dream? $20. You know what? It could be. And I'm not saying it's going to be. It could be. And this is why we don't get out all of our position simply because we hit an MPOS. We'll take it. We'll send out a tester there, much like many other investors probably looking to sell into that supply level, and we'll see how we go on the rest. So buy, hold, or sell from here. Absolute 100% hold. There is no reason to sell. Sell is off the table. I usually do those probabilities, don't I? I say, I don't know, buys at 80%. And I think holds at 80%. Let's go say buys at 20%, and I'll tell you why buys only 20% in a second. And then I'm going to go down here and fix my mistake. And then we get to sell, and you know that for me, something like this sells at 0%. So right now, there's absolutely no reason to sell. There's a huge reason to hold, and the only reason why I might not buy it today. And I do think it's going to get 745. You say, hey, Carl, that's pretty neat. 675, 745, that's a nice little swing. Is in terms of reward to risk, and this is where your tradecraft comes into it. So tick, tick, tick on everything else. Yes, I think it's going to get there. But in terms of our reward to risk, let me draw our reward, say, green. Green is good. Green is money. Green is up. There's our potential reward. And again, I draw these supply areas as boxes, right? They're zones. So we might not necessarily get all the way in there. And then if we go for our risk, I don't know, let's draw that orange. It's not too bad, is it? It's not terrible. I mean, it's probably still 1-to-1, and that's why buys still on the table. And the reason why I do that is because if I'm going to set a stop loss, I'm probably going to set it under here. Put a bunch of demand. I know there's going to be demand at these levels. Look at the candles, look at the peaks, look at the troughs, old peaks, old peaks are points of supply, act as points of demand. If you're not sure what I mean, there's a little peak in there. And that was a POS. It should act as a POD, right? There's another tiny little one in there, right? So these are demand levels. And really, when you're trying to set a stop loss, put as much demand between you and that stop loss as possible. I reckon there is 1-to-1. Look, maybe you can buy it. Not maybe. I think you can buy it. I don't want to give you maybes. You're not here for maybes. Having said that, I don't know what's going to happen next. Okay, I can't see the future. Unfortunately, apologies for that. Okay, very quickly here, because this was the reason why we're all late today. So let me just use the damn thing. Thomson Reuters Refinitiv Icon. Thomson Reuters, one of the biggest names in data gathering globally. We know who they are. Refinitiv Icon, that's just the product they have, which I've got a subscription to, and it costs us tens of thousands of dollars a year. Just let that sink in. Not thousands of dollars a year, tens of thousands of dollars a year that Think Markets pays for me to use this, to then put in front of you on Tuesdays. So thank you, Think Markets, for investing in your education. And Refinitiv Icon will aggregate the very big brokers out there. So, Deutsche Bank, Goldman Sachs, Credit Suisse, UBS, and Co. And they are the number of estimates here. And we can see that there are 0 strong buys, 4 buys, 4 holds, 2 sells, 2 strong sells. Wow. What a polarizing company A2 Markets is. Yes, I'm sure you've all cursed me in your typing away there. Sorry, I'm a bit rusty. 2 weeks off, I'll get it. But you know the drill. I've just discussed what Refinitiv Icon does. Here's your polarizing, or the polarized brokers, aren't they? 4 buys, 4 holds, 2 sells, 2 strong sells. Their average target is 15% below the current price. That's how bearish they are on A2 Milk. And what's fascinating about this, what's so exciting about this, is it's going up. It's going up, isn't it? Despite, sort of on average, brokers been quite nervous about it. And so many times in these sessions, we've seen stocks that the brokers are really excited about, and yet those stocks are going down, aren't they? I wonder what that means and how you should interpret broker ratings. Are they acting in their best interests with the stuff they make public, or are they acting in your best interests? I wonder. Hey, you don't pay for this stuff. Let's put that aside and look for the EPS line. So I like to go down here next, and I want to see earnings growth. I love growth stocks. So 14 cents. EPS in 2022, that's in the bag. Now we get to the estimates parts. And again, this is the broker's numbers, not mine. So if it doesn't play out this way, don't blame me. I didn't make these numbers. 18.8 cents. That's very nice growth in there. 22 cents, 27. I love to see, all four heading higher. And then the maths comes in here, and it just says that we've got a compound annual growth rate of 24%. Now, the market's probably going to have a compound annual growth rate of that time around about 6 to 7%. That's the market average over the very long term. So to be growing at sort of 3 and a bit times market average is sensational. So we're happy to pay a little bit more on the PE. Okay, because remember, if you buy something today, your P is fixed. It's the E that's going to change your PE. So if E goes up, your PE comes down because of the inverse relationship. It's P over E. If E goes down, your PE goes up. And that situation is the value trap. There's no value trap here, I don't think. We've just got a PE of about 19, which if it can maintain its growth to that day, would still be very, very good value. But for a company growing that well, 40, I'm not actually balking at 45. I think 40 is where I'd kind of top out. And if we look at the median of the brokers, they're at 26.7, which I think is actually quite conservative for this company. I mean, I could go higher, as I said. I could go 40 is probably a stretch, and you get some silly numbers here. But I might go to 30. So if I go to 30, because the brokers, the point is, even if I stick with what the brokers are saying, there's upside here. Okay, this stock to me, based upon the growth that's there, that the brokers are seeing, not what I'm seeing, but the brokers are seeing, this stock looks very much still on the right side of fair value. If anything, 773, and that kind of gets it up to that major point of supply, doesn't it? So what we're seeing here is where the technicals and the fundamentals are coming together to give you greater confidence in what you're doing. Now, confidence is wonderful, but that's as much as you're going to get in markets. You never get certainty. All you get is confidence. And for all we know, this thing could be back at $5 or $4 tomorrow. We don't know that, but that's analysis. You make your bets, you make small bets. When you get it right, you let those profits run. That's what this system is designed to do. And when you get it wrong, you cut them real quickly and go on to the next one you've got a lot of confidence in. I know we spent a lot of time on that, but what I like to do at the start of these is lay the foundations. Let me head to the streamers over here on YouTube. Adonis is still on AMP. Let me check that one out. Look, here's another one we have liked, isn't it? A little bit like A2M, the biggest dogs of the last few years, isn't it? And this is the thing, right? You're going to have people that are going to tell you to buy them all the way down, buy them. And I say, hey, they're no good. Don't buy them. And then they put in these base patterns that I like to see, right? And they start to change the trend. Look at my moving averages, the traffic light system from red. Look at this. Look how strong these averages are, and then you start to break above and you start to change, and then you go to green, and that's when I start to tell you to buy them. So look, I think this one's fine. I think stick with it. There's no reason to not to trust this trend at the moment. There's a little bit of a pattern maybe here. Today's candle is not great, but look, I'm not fussed. And the pattern, the pattern I'm talking about. So this one here, where we get potentially the lower POS. I'm not stressed out about that today. I think it's all good. I'm happy with that. But monitoring what's going to happen here, because you don't know when it's going to happen, if you get my drift. So AMP, buy, hold, sell, 100% hold. I don't know if I'm a buyer today, just with that shadow and that black candle in here. So I'm probably not a buyer today. But, it prints another couple of white candles in here. We did the supply side candles. So let me show you the demand side candles. I doubt they're going to be orange. So let me show you what they will look like. Let's do that. You can't see what I'm doing, because this is not showing up on yours. It's only showing up on mine, but you'll see that change, and you'll see me draw this And then the other one, of course, the other demand side candle is this one here. So if you want to know the names of these candles, this is, well, I guess it's called a hammer, quite often called a hammer, or a pin bar, and it looks like a hammer. If you hold the hammer, hold it on the stick bit, you've got the hammer at the top, and this one is called the Marubozu. Okay, and these are our demand side candles, okay, or we sometimes in these sessions call them our demand buddies. Okay, so keep an eye out for those to buy. So happy to hold AMP, waiting for the demand side buddies to pop in to upgrade to buy, and I can't see any sell there, so I'm same on that one. I'm not gonna, will I look at these? Okay, count to 30 seconds. Start counting. We're at 28, 27, 26, 25, 24, 23. Come on, Icon, you can do it. Looking at the brokers' 7 estimates, quite polarizing, not well liked, but it's going up. How about that? EPS line, 10, 7. Oh, this is, well, I guess, look, that's in the bag, but from there's growth. Okay, so 19%, again, better than market, that's fine. Let's do the dynamic F here. 16 times for 19% growth. I'm okay with that, no problems at all. I need to change this to match the financial year. Remind me to change it back later on. Okay, because this is already done. It's just a function of the end of the financial year. So this is the growth here. This is the growth here, not this one. Okay, so that is encouraging. And when I change that, it does change this to 13, but it's still double what I expect from the market, and we get a pretty reasonable number here. That 13, I'm okay with that. So the 13, the 16.9, I'm okay with that, and that means that this is still on the right side of fair value for me. Okay, so technicals and fundamentals once again coming together. Okay, let us go back to the Zoomers ARU for this one's for Craig. Looks good, no complaints here, Craig. I'm just going to go back to my default Zoom. Click. 100% hold. We know, well, I'm sure we've discussed this many times, and I'm sure I've drawn the red box on it, so we know what we're dealing with, and we just have to deal with it. It's not much fun. There's your first test. Fortunately, I reckon we've just done our second test, and we're coming back for more, aren't we? So we are taking out the supply that's at that level. We know that this is an MPOS, a major point of supply. And I want you to visualize, you know, when you look at these charts, and please look at the charts when you're not in these sessions, okay? Imagine that supply that's created by this major point of supply is that big. And then after the first test, we've taken out a bunch of supply. The supply left is only that big. The supply left after that second test is only that big. And then on this next go, you know, you're thinking there's probably very little supply. If you wanted to get out at that level around 50 cents, if that had been pegged in your mind, anchored in your mind as a level to get out, you've probably done it by now. So if that supply is out of the market, the great news is about that supply is, guess what they get once they supply? And you have to think in these terms, of course. They get money. Okay, so that once they've supplied. So we go supply gets the money, right? Okay. Now, guess what demand is? Let's change the color here. Guess what demand is? Demand. So if we put supply up there, demand's down here. All right. They are also right. They are right. They are money. All right. So you have created all of this cash from a stock that people are familiar with, right? You've gotten over that hurdle of figuring out what this damn thing does and getting it to people's attentions, and now they've all got cash. Well, that's demand to me, and this is why you get breakouts. So you'll go by that technical analysis book, right? The technical analysis 101. Whoever wrote it, I'm sure they were a genius, right? Because they wrote a book on technical analysis. But did they actually explain to you why a breakout works or how resistance forms? A breakout works because you take out that supply, much like it just showed you, and that supply creates more demand because they regret. If we get to 55, everybody got out going, oh, why did I get out at 50? I knew this thing was awesome. I did all the research, and I know why I got out 50, because it couldn't get through, and I just thought it was never going to get through 50, and that's why I sold it. But this thing's going to $1. I've got to get back in, okay? And that that demand, that money there mixes with the demand that was already in the system. How do you know demand was already in the system? Look at the chart. Of course there was demand in the system. And we've gotten rid of all that supply. There's a supply vacuum. There are people now who are set at 50. If you're set at 50, you're not getting out at 55. You're not getting out at 60. You're getting out at $1. That's your next target. And remember, we talk about those round numbers. We say, oh, if something spent a lot of time at half, double that is where it goes to, right? Think about the psychology. These people who got out at 50, they were in at 25, right? All their brains could comprehend was this thing going to 50, and that was it for them. All right, the people getting in now, they're getting in around 40, around 50. Their brains aren't getting out at 60. Their brains are getting out at $1. That's how breakouts are created. And that's why things go a long way from the breakout. They don't just stop after the breakout. Okay. I'm not going to do the fundamentals on ARU because there won't be any broker coverage. So let us keep moving. I'm going to go, let me check the Twitterverse and see if anybody's tweeting at me. I don't think so, but I'm not an expert on checking how to do it. So let's say no one there. Let's go to the streamers. ARU, Stephen. Well, good. I've just done that one for you. That's brilliant. John has got he's done. It's lithium review time, everybody. Let's go. Lithium review. Mineral resources first. Let us do it. Let's smash these things. Okay, mineral review. Remember, I talked about buy, hold, sell, and the percentages. Okay, there's no sell here. And I think I've said that consistently, haven't I, for a long time. There's no sell here. If you're worried about your mineral resources, because let's face it, you probably got in at $10 or $15 when you're going to say, hey, I just spotted something. Okay, what is it? What is it? What did I just spot? Okay, and whilst it's not a MPOS, because, right, let's zoom out, because there was a big supply event there in the past, it is an MPOS. Okay. I wonder if you spotted it as well. So where does the red box go? The red box goes here at 100, and I'm going to go a little bit beneath it. Let's say 98-ish, right? 98-ish, right? So this is an MPOS, not because it was a major supply event from the past, right? But because it is, let's face it, it is the most important round number you can get, and there will be supply there. Why will there be supply there? Because let's face it, if you bought it at 15, your dreams were to sell it at 100. There are going to be people here that sell at 100 for no other reason, but it's $100. Now that doesn't mean you're going to get rid of everything at this point, but I do think you do this. All right, so I'm officially on the record as saying that bang out 1/3 of your mineral resources in that area for no other reason, but it's hitting $100. Are you going to sell the lot? No, of course not. You're still plus 2/3. So I think it'll come back from there. Let's see how you go. But do not underestimate the power of round numbers, and do not underestimate the power of round numbers to be like as in history could show mineral resources prints 100 and then goes back to $10 for all I know. These things have happened. Go have a look at the BHP chart and how many times it hit a major number and then was a third of its value after that. Not saying that's going to happen, but you need to be aware of it, and that's why I go minus 1/3 without even consideration of anything else. But you still got plus 2/3. Why have you still got plus 2/3? That, and we can always add back what we sold out if it holds 100 well and then gets through, because hey, we still want it to go to 200, don't we? So mineral resources is absolutely hold. I don't think I'm a buy. It's too close to 100. I'm not buying it here. CXO is the next one requested. There you go. We haven't been very bullish about this one, and you can see why. And I think we've been very accurate on our analysis and asked the experts on this and how important, how substantial this breakout and then failure was, and the size of that candle. I'm going to say this MSE, I reckon, and this is my scratchings from last time. I'm going to go major supply event, and we don't muck around with those. And I probably could have used a different letter at the start of that word. Around, no, the other one. We don't muck around with these. Okay, you don't muck around with MSEs. So that is this is, you know, when I go buy, hold, sell, I can't even say holds on. Okay, hold might be sitting at say at 25% right now. Sell is definitely in the mix, isn't it? Well, if buy is 0, if buy is 0%, then that kind of might give you an idea where sell might be. I don't know. It's just holding. It's just holding. It's long-term trend zone, isn't it? So let me do this. Let me hedge my bets and say, and that's where we're at. But at least I can say, based upon what I can see, buyer's not on the table. And you're all going to say, hey, Carl, Core Lithium is the best lithium stock in the world, bar none. And you might be right. That might be what happens tomorrow. It might be. And I'll be happy to stand corrected and say, you know what, got that wrong. Absolutely, that could happen tomorrow. It gets taken over by Tesla. I don't know. It's possible, but I can only go on probabilities. And these, based upon what I can see in the price section, lower peaks, lower troughs, major supply events all over the place, candles, that's where I'm at. Is it possible that this 0% comes in the equation? Anything's possible. Okay, let us keep moving on these lithium stocks. LTR, Liontown. Last time we looked at it, I think I did minus 1/3. I think you think that's valid. I think you minus another third, and maybe the most you might, I think the most you've got on this right now is plus 1/3, isn't it? Plus 1/3. Lithium looks sick unless you're Mineral Resources. It seems Mineral Resources has a bunch of iron ore, and we saw what the iron ore price is doing, right? So that's why that's separate. Let's go to IGO. Lithium's looking sick, everyone. We've also done, look at this, minus 1/3, minus 1/3. So you only had a third left. And I'd say that's accurate. A third left. Hey, if it does this, I know you're all a little bit depressed now because I'm bagging your lithium companies. But if it starts to do this, guess what I'm going to start to say, right? I'll be all over it again when it starts to do this. Why? Because it's showing me that demand is coming back in and supply is starting to back off. All right, happy to get back into this, happy to add risk to this if I see those fingerprints of demand coming back in and that supply is backing off. I just don't think that's the case here. So for me, and these are all for me, you do what you have to do. Plus 1/3 would be the most I'd be retaining on that. LRS, I know this is such a popular one. Didn't quite get going, did it? I think last time we looked at it, it was somewhere around here, and it's just failed with the rest of the bunch. I think you could, if you squint, you could probably get to a hold, but I think the hold on the hold recommendation is tenuous. I cannot do a full review of the lithium sector without doing Pilbara Minerals, and you can see the minus 1/3 there. Blasphemy for some, but just calling it as I see it. And actually there's two there. Look, there you go. So the most, I think, if you've been following me, for what it's worth, the most you have right now, I have to be careful in typing that because I don't want to come back in a couple of weeks and say, hey, I told you to do 1/3 there. No. Most you would have right now is plus 1/3. Okay, that's what we're saying here. Okay, and again, if it pops up, we're happy to go for it. Until then, and I think I said maybe if it gets down there, you'd have a government to remove that so there's no confusion. On Pilbara, what's the level? Look for a close above that high. That high there is 498. So close above $5. Right, close greater than 5, and it's starting to look interesting. Again, I'll just put that on screen so we've got that for the record for next time. Until then, I don't think you need to do anything. I'm just trying to think if there's any I've missed out. AGY, which was the best of the lot. It still is, but we are seeing straight away one of these classic patterns here where we are seeing that lower peak set with not a great candle, to be fair, and we are seeing the signs that supply is building. So if we go this, this will become an MPOS soon. Let's go POS for now. Let's go POS. POS, and the reason why I haven't upgraded this to MPOS yet is if it would need to break beneath here. So if it breaks beneath there, we're creating a new phase of lower peaks, lower troughs, which would promote this to a major point of supply. But for now, we're okay. If we close beneath 56, I think we're in trouble. There's even a little low here that you could go if you're a bit more aggressive, so 58.5. So let's say closing 58 or better. So let's go minus 58. Minus 58 equals minus 1/3. That would be my suggestion. Again, it's only a suggestion. Okay, and then minus, what's this minus here? That's minus 56, right? minus 56 would be the next level. I don't want to see it close beneath that. Okay, I don't think I can be any clearer on these. Let's keep moving. That was your big lithium review. Let's do a BAS, I should say. Looks great. BAS oil, obviously getting a little bit of a lift from maybe some of the activity in the sector there. I'm not familiar with where these guys are situated or where their project is. Hold is look, absolutely hold. I can't see any reason to sell it. I just can't see any reason to buy it either. So I'm a little bit concerned. But hey, Carl, that's looking really warm. It is looking warm. This is my point of supply up here. I'm worried about that and just the proximity to it. So that's why I can't buy. But I think we can hold it and we can see how it behaves in here. We know we're going to get a little bit of supply. But if we can do something like that, one of these classic sort of testing patterns into the point of supply with rising troughs, that's the key to tell you. And the reason why we want the rising troughs is because it tells us that demand is building, right? And we know that, supply is being taken out. So, first test, second test, and then maybe breakthrough. So absolutely, it's a hold. I can't see any reason why you would sell it. I just can't get to a buy from a reward to risk perspective. And the other one for Peter, being cheeky with two there, I will do it because I know we talked about it last time, is A4N. And I think we said, I'm pretty sure it's down here, and we said, watch out for supply in that zone. Have we seen supply in that zone? Not really. I mean, there's a little bit here. It's great it got there, so I'm glad it's there for you. There's a few candles there, but I think they're well balanced by the white candles. Let me just say that low there, so close below 69, I think supply is starting to win the battle in that zone, and then you would go the minus 1/3. But that's what we're talking about here. We're not talking about minus 1/3. So sub 59. Minus 1/3 down here. Otherwise, you're still plus 2/3 on it. Right now, you're holding the whole position. If you didn't get out some here, just on the basis that it was a major supply zone, which is I'm pretty sure what I said. I said, hey, if it gets into the two red boxes, bang out a third. If you did it, no worries. Banging out another third on that close beneath that 69 level, and see how you go with the last third. If you didn't do it, then obviously banging out your first third there. I think that's pretty straightforward on that one. Okay, let us keep moving back to the streamers. S32, which has had a little bit of a bounce on the fact that commodity prices have stabilized. First, it was the China COVID rules relaxation rumours got things going, and then it took some major protests to actually make it happen, and then the property sector bailout has stabilised some of those commodity prices. Iron ore was really the only show in town. We saw the mineral resources chart, and many of the other base metals, whilst they have recovered, can't exactly say they've prospered like iron ore has. And that means that many of your resources mining stocks have done this compared to, say, a BHP, which is an iron ore company vastly predominantly, 80% of their earnings, a Rio Tinto, an FMG, which I do note is down today. And there's me shaking my finger. I did warn you, this iron ore bet is a bet on the Chinese property market. All right, so just be careful. That's a just be careful finger, not a naughty finger. I got this wrong. I thought these were going to go down because down here, it was complete, total, utter breakdown, but I could not foresee what the Chinese government was going to do. And some people might say, hey, you should have known they're going to do something. Well, they weren't doing anything for a very long time there. So very different on S32 is my message. And saying alumina, that's not alumina. Alumina, you see how S32's chart and alumina's chart are very similar as well. So I think they're just in a different basket to your BHP, Rios and Fortescues. And then of course we've got the Sandfire, which I think was just heavily shorted. We've seen that rally because price of high grade copper, I haven't looked at it a few days because I've been on leave, forgive me, but hasn't rallied all that much. There you go. It's rallied a little bit, but does that justify, therefore, Sandfire's rally? Not so sure. The question was about S32, and I'm going to say, look, depends a lot on what's going to happen in China. The technicals are a bit ho-hum, okay? We've got a little bit of an uptrend there, but the price action is not great. We shouldn't come back like this into this zone if things are all good. If we're like A2 milk. A2 milk was great price action. There's some supply here for obvious reasons. Look, I can get to hold. I'm going to start to be really concerned about it if we sort of get beneath this level here. Let me give you that level. Low there, 390. So closing 389 or below, and I think you are going to take the cue, I think, from this one and say that the risk to the downside, I just think are too great. You've got a level here, you've got a level here, but no, it's not something I'd buy. For me, buys off the table here. I can see hold, and I've given you where the sell is, so that's a pass for me. Let us do BRN, a Brainchip, maybe. So this is from Stephen, who's saying there's a big reversal. Am I a buyer? I'd be a holder. I don't think I'm a buyer. I think a little bit more needs to happen here. So, the leopard doesn't change its spots so quickly. I'm not saying leopards can't change their spots, because they can, because this thing has gone from good to awful to good to awful to good to awful many times. There's no reason why it can't go back to good again. But let's just watch out. So let's just watch out for what's happening here. I'd certainly be more interested if we got above that zone, and or if we did something like this first, so a little hook. I call them hooks. So we want to see how we deal with supply. Okay, so we know there's supply here, right? Pos. So that's great. Supply's not a bad thing if you want something to go up. Kind of is, but what's the silver lining is we get to see how supply reacts to demand. Okay, so we know there's demand. And I don't know why, and I don't care, honestly, Stephen. You could tell me all about it, and I wouldn't be interested. So there's demand in the system, we get it. But what does supply do? Does the supply bash that demand down again? You get a bunch of black candles, in which case you'd understand why I'm not prepared to take the risk yet, based upon what I can see, to buy BRN. If we see a bunch of white candles in here, or the candles with lower shadows, so we talked about the hammer and the Marabos, if we see those white candles print in here, guess what? The market is not concerned about the supply, and supply is not having an impact. And that's when I could upgrade it to a +1.3. Okay, despite the fact that this is still very much a long-term downtrend. Okay, and I'm okay with that because I'm just taking nibbles on stuff. Okay, I'm not going all in. I'm not putting my whole portfolio on this, but based upon the possibility, the probability that demand is starting to overwhelm supply again, I could happily add 1/3, and then we'd have to go to. So if this was chapter 1 or book 1 of Harry Potter, right, 7, 8 books, whatever I've been reading to my daughter. This is the next edition, right? We see how we go, and then maybe we get a plus 1/3 there, maybe. And you're starting to get an insight into how my brain thinks in terms of buying and selling stocks and taking. It's just risk. I don't care what Brainchip does. Brainchip just represents risk to me. Do I want to add some risk on Brainchip? Or do I want to remove some risk on Brainchip? Is Brainchip the one I want to add risk to compared to all the other ones out there? I don't care what Brainchip does. It's irrelevant to me. It just represents risk. And as an investor, I am not a money manager. I'm a risk manager. Okay, I'm managing the risk to make sure I still have money left tomorrow and the next day. Very interesting chart though, and certainly gives me the ability to talk about some valuable concepts. Okay, this is from King. I'm going to pick up the pace here, everybody, because I'm sure it's 47 minutes in, and I haven't done enough of these. So let's go to Aston Minerals. Aston, I don't know the codes for every stock, unfortunately, King. So I could do something like AST and just hope that it hits. And when you do finally type in the code, it's going to be, I found it. There it is there. Aston, I found it. Okay, ASO. You got lucky on that one, King. Please type in the codes for me because that's how I'm going to find them. Okay, Aston Minerals looks okay. It's looked horrible for a long time. Nice little segue from our Brainchip conversation. That doesn't mean that if the signals of demand coming in and supply doesn't mean I can't buy it. But I'm not as interested in this right now. I don't like this candle. I don't like the shadow. I don't like this shadow. I don't like this candle. And I don't like this candle. There's supply here. It's very real. It's at 10 cents, another round number. This is just a wait and see. Look, if those white candles come in, and we can, stabilize here. We can meet that supply with demand, the new demand, the fresh demand that's coming into it for whatever reason, I don't care why. Then that's the first step. And then if we can break through that level, it would only be then that I could contemplate a plus 1/3. So a fair bit of work needs to be done here. So let's just say if you've got it, happy to hold it. I don't think sell is too high, although sell is creeping in. And again, this is not me making stuff up as I go. This is me just being totally consistent with everything I've ever taught you. Sell. So where's the sell? So if we go from here to here to here to here, because of the candles, all right, we know based upon what I've shown you that's where the sell is coming into the equation. All right, so beneath here is where the sell comes into the equation. Let us keep moving then. 92E, okay, always a fascinating one. The the uranium. That's disappointing. Well, that hasn't gone very well. Uranium price hasn't done a whole lot, and these are going to ebb and flow. Uranium prices come down, hasn't it? Very slightly, but not helping 92E. Yeah, look, again, it's one of those. Put a little bit of risk on and just waiting to see what it can do sort of things. I'll leave it with you. It's in your hands. If I only look at the chart, I can't see a lot of reason to own it. And that is just stating, facts there, clear facts. Short-term downtrend, long-term trend changing, all black candles. And these things, as I have said many times, will ebb and flow with the uranium price and with what they hit or don't hit. So I will reiterate, it is one of those speculative buys based upon the fact that if it hits something, it's going to go from $40 cents to $4 probably very quickly. And if it hits nothing, it'll go from 40 cents to probably 5 cents over a very long period of time. So it is, one of those almost binary bets with an asymmetric payoff, if you were, okay? But if you're just asking me about the technicals and not the fundamentals, then I can't see a great deal of reason to own it. I know that disappoints many, but I'm sorry about that. Okay, let us go to ABB. This one is for Gary. There are some signs of that it's turning around. I don't think it's A2 milk signs it's turning around just yet. I'm concerned that after something that looks this good, okay, let's face it, that's getting to the point where it's kind of A2 milk turnaround stuff. It's looking really warm. Not hot, but warm. Why not hot? Well, because of that. And I'm sure that's been drawn there by me for a reason. And look at this. I said, hold it if you got it. So yeah, look, up to that point, it's very much a hold it if you got it. I probably wouldn't have been able to get to buy. But this is disappointing now because the fact you've taken out all the demand that was in that candle, I know because we've closed beneath the lot of that candle, and then the price action has changed as well. This is disturbing. It's got one last chance here with today's candle. You need that to close near the highs. Obviously, today's candle is a live candle. I'm going to click update and we'll get an update. You need this to get up there real quick. If it doesn't get up there real quick and it does something like this, okay, there's that pattern again. No surprise here, then I do think you are getting out of it and living to fight another day on something else. So we can see that update came through. You can just see that it actually got better. Okay, so this is, last chance rally here on ABB. Okay, it needs to get up and back into that 280, 290 zone real quick with some white candles. Otherwise, it's looking quite bearish. Okay. Do I very quickly? I'm a little bit curious about this, but I know it's such a fan favorite. So let me go here and again count to 30 seconds and it'll be done. I know many people just want to look at charts. Maybe we'll come back to this one. Oh, there it is. Okay, so we've got 7 estimates, 2 strong buys, 4 buys, 1 hold, 1 sell. Average price target, look at that, 390. How about that? So often is the case when brokers get it wrong. They don't drop their price targets because that would be an admission of an error, and they leave those price targets up there in the hope that the price will recover and not make them look wrong. So that is concerning in itself. Looking at the EPS line, that one's in the bag at 5 cents, and then we've got the most amazing growth coming through. And I would suggest to you that if this growth was actually going to happen, the chart wouldn't look like that. Having said that, I don't know any better than what the brokers know, so I'm not going to try and second guess them. The valuation is not terrible. I mean, this is looking pretty cheap. Even that looks quite low. And the reason why, I'll look at this. Once I get that right, we got up to 50% here. And that's just a very low PE. I mean, what would I pay for 51% growth? I'll tell you what I'd pay. If this was actually going to happen, I'd happily pay 40 times. and which makes Aussie Broadband the cheapest stock on the planet. Even if I split that in half and go to 20 times, which for a, let's face it, a utility stock is probably more reasonable. Well, I get 372, don't I? I get where the brokers get. Weird one. That is the weirdest thing I have seen in a long time. I'm going to keep moving because I can't explain it. Okay, I can't explain why something that appears based upon 7 broker estimates, and let's assume they know what they're doing, why does the chart look so bad? It explains why it was starting to recover, but why does it look so bad since then? Don't know. Okay, let's go back to the streamers. I do have some tweeters. Here we go, tweeters coming in. Maybe not. Okay, let's do the streamers. The Twitter's just circling. I hope you can still hear me because that might mean my internet's down. BRN we've done. Let's go to TNE, which looks great for Sergio. TNE looks amazing, doesn't it? A little bit like Mineral Resources. 15 might be an issue because it's a big round number, but otherwise I can't see any reason why you would sell it. Would I buy it? No, I don't think I'm going to buy it. And the reason why I don't want to buy it is this, and I'm not sure if that's a dividend. I don't think it is, and correct me if I'm wrong. But that does look like an MPOS to me. Not an MPOS, a major supply event. Okay, I'm a little bit concerned about that. And then we're just watching now for this pattern here, which we've talked about 1,000 million times. Okay, so if it were to do that, I would be concerned. You know my rules, very simple. They're just this is the great thing about rules, right? You don't have to think. Okay, when you think, bad things happen, especially in the share market, right? Stop thinking. Have a bunch of rules based upon some really sensible stuff and just execute those rules. Stop thinking. Don't get down here, and when it closes beneath that level, and I'll give you that level there is 1332, and go, but Technology One, what a great stock that is. Just do, right, based upon a system. Right now it's fine. So holds is very high on the agenda. It's just on a buy for that reason. I don't think you need to sell it yet, unless you saw another really big, nasty candle before we take out this high. So the high there is 1443. But if you do see another MSE in here, then this minus 1/3 effectively will come up to here, okay? And I know a lot of people think that this is the best stock in the universe. Don't care. Yeah, this is just the way I would do it based upon my experience of what has happened many times before. Okay, we've got, the tweets were just people retweeting and liking my tweet. And if you don't follow me on Twitter, the handle is @CarlCapelingworth. Get out there and hit follow, because I'm always putting interesting stuff up there if I do say so myself. Okay, let's keep moving. FDV this is from Majid. Let me do this for you. I'll do this one very quickly. Frontier Digital Ventures. I don't think there's a lot of demand in the system here. There's just not a lot of, there are very few signals to tell me demand is active. Okay, I can see lots of signs supply is active. So Majid, I think you're fairly new to these sessions. We talk a lot about Japanese candlesticks, and the black candlesticks represent supply. The way you get a black candlestick, when you think about it, is the stock needs to open at point A. Right, let's call this the open here, at point A, right, and you're going to close somewhere down here at point B. And the only way you can get from point A to point B is if there is an excess of supply in the system. And we don't know why, and we don't really care why. That's the whole point of technical analysis, is to not to ask the questions of why, but just to act upon what things are doing. And that supply is a concern. So, supply is beating demand hands down. And we're seeing lots of black candles here. We're also seeing lower peaks and lower troughs as well. I know there's a little bit of a bounce there, but it's uninspiring within the context of this long-term downtrend, which I think is very much in play. Hold it's very tenuous. Hold on the term hold. If anything, supply. Yeah, well, there you go. Not an accidental slip there by me, because I was about to say sell is highly prominent here in the probabilities, but then I use that word supply, because ultimately that's what sellers are. Sellers are just people who are supplying, and maybe you need to think about being on that side of the equation. The other one is Karoon, which I think is okay. I know it's been ebbing and flying a little bit with the energy prices. So let's do a super quick look at energy prices. They're not looking very pretty, but I'm encouraged. I mean, look at that, and that's terrible. I'm encouraged by the fact that our energy stocks have done well in the face of a pullback in those energy prices. And that just shows that there are fund managers out there still playing this energy theme, still buying those stocks. So I'm okay with that. And we may get, as I said on Friday, a little bit of margin expansion. I said maybe on Friday, on Wednesday on AusBiz. Natural gas popped up. That's also healthy, and the European gas prices there are pretty steady. For the coal bugs out there, coal is okay. You can see there thermal coal prices holding above about 375. We are watching again for this to be a significant lower peak, but for now that's okay. And coking coal, for the ones that are interested, say Newcrest Resources, is flat. Nothing major to see there. I'll just head back to the Crude chart, just finish that one for you. I'm a hold there. Lower peaks, lower troughs. Look, I'm going to go hold. I think it's fine, but we need to see it get back up to those 240s pretty quickly. If it closes beneath that low there, then my thesis would change, and you might say, hey, Carl, you're being really flippant here. And yeah, that's just the way my analysis is. I'm in stocks for a good time, not a long time. If it closes beneath that low there, let's call it $2. Am I going to hold it till it goes to 150? No, I'm going to go find something much better to do with my time and my money. I know Gary wanted a few gold stocks there. I'm going to do them super quick. Gold review here. So I'm happy to hold EVN, but you can see the pattern that's potentially forming with those lower peaks. So just be careful on a close below 276. But otherwise, I'm okay with this. And we have to understand that this could well prove to be too strong. The supply in that zone could well prove to be too strong. But I'm going to go hold on that in the meantime. And then we've got GRR, which is looking good, but again, we've done that pattern there, isn't it? This is one of those major supply events. Just be careful when you do see these big black candles. Something's not right. Okay, something isn't right, and you can always just knock out a third on that basis, because you're kind of seeing it where it's supposed to be, and then you saw this lower peak with that upper shadow. And for me, it's all kind of building to this, really. I mean, how many times do you need to be convinced? How much evidence do you need to have from the market that everything's not going to plan? So look, I'd be maybe taking a little bit of profit off the table. I think you're still plus 2/3 on this, but if you haven't already, taking a little bit off the table and holding, because this is all still good. Okay, but I do think you saw some evidence in there, Gary, where you could have maybe taken some profit. You're probably nodding your head and going, yeah, well, fair enough. I probably should have been more on top of that one. Ramelius is okay, but not great. So I'm going to go hold on the basis that this is still here, but we are lower peaks and lower troughs. I'm definitely not going to be able to buy, but it's okay to hold, I think, on that one. And just finish off the gold review with Newcrest is actually looking the best of the bunch, because unlike EVN, which EVN's okay. EVN's very much in that supply zone, isn't it? Whereas Newcrest is kind of edging to the top of it. We've seen a few candles print to the top. So yeah, 100% a hold on Newcrest. I'm pretty happy with that one. Is it a buy? Look, let us see some white candles. See some the hammer or the Maribozu demand side buddies in here, and then I could upgrade it to a plus 1/3. All right. So if you see the candles in there, plus 1/3 on demand side buddies. Okay, on the demand side buds in there, and I'm going to do Northern Stubs. I know that's very popular, much like the other one we saw, which was hitting that zone. You do need to be a little bit careful. I think this one's doing better, so I'm 100% a hold here. And again, demand side, but I could add a third if it was starting to pick up with some white candles. So actually, gold's looking pretty solid. I'm pretty happy with most of those gold stocks. Okay, let us go to John has got GRR, so we're getting back to the iron ore side of things. A disappointing rally, I think, compared to your BHPs, your Rios, your Fortescues, your Mineral Resources. That says a lot. The fact that it did so little when the others did so much, I think should give you cause to be very cautious on this one. However, I can go hold on the basis that we are still heading through here. I don't like these two candles, and I don't like where they're occurring. Okay, we're just watching. I know it's broken record stuff, but consistency is good. Consistency is not a bad thing. We're watching for this now, aren't we? So POS, and then the POS with the supply side buddy candles, and then that would help you potentially manage an exit on that. If you don't see those, happy days. I've called it a hold. Okay, in the meantime, LRK, which is trying to turn around Aussie Broadband and A2 Milk style. I think it's kind of somewhere between the two extremes there, where A2 Milk is a great turnaround play and Aussie Broadband is failing. But as long as it holds this level here, I'm okay. You can see the demand zone in there. I think it's okay. I'm happy to go hold, but extreme pressure. I mean, let's face it, there is extreme pressure coming in from this zone here. And for that reason, I think it'd be foolhardy for me to call it a buy, okay? Let us keep moving. Might go back to some of the streamers there. Is there any gap? Just from Johnny wants to check something on core lithium. I don't know. Is there a gap at 107 on core? 107, not that I can see. No. Oh, down here, potentially. Maybe John is asking whether the gap is going to be filled, and there is a theory out there in technical analysis that once gaps are filled, that's often the completion of some big mission to get down there. But I can tell you that high there is 107.5. That low there is 109. There is a little gap here. Yeah, there's a tiny little gap here, and this low here is 109, so it hasn't filled a gap. So if that's what you're thinking, John, that like it's going to fill the gap and go straight back up, I don't like that idea. I don't like that thesis. Gaps for me are far less important than gaps in technical analysis textbooks. I don't subscribe to that theory that once they're filled, that's it, something amazing is going to happen. Sometimes it does, because it's a little bit self-reinforcing. Where gaps become important is where you see them within trends. So not to try and spot turnarounds, but within trends. A gap up within an uptrend is super, super reinforcing that there's an excess of demand in the system, and a gap down in a downtrend also similarly reinforces that there is excess supply in the system, and don't muck around with those. Okay, let us keep moving here. WR1. Winsome Resources. I'm not look. I'm not familiar with what the reason why. Nor do I really care. But clearly, it's had a great run. Yeah. Look, I just think the cluster here, for whatever reason, that one, and that one. For me, it does smack of this. So I'm gonna call that minus 1/3. I still think you're plus 2/3. I don't see any reason to go more aggressive on the sell side than that, because this is all pretty good. And let's face it, there should be a bunch of demand in here because there was a bunch of demand in the past. But once again, to be the broken record, and I don't mind doing it because this is how you learn stuff. You repeat something over and over again. If you see this, and might be a week or 2 weeks down the track, and if I'm not here to discuss it, that's where you would be playing your next 1/3. And let me just change it to red so it can make some sense. And that's where you would do your next 1/3. So I'm on record as I think, just based upon what I can see and the run it's had, I'm happy to do that, and then contingent on these other things happening, going the second 1/3 out. Having a look at Resmed, question from Adonis: is it a double bottom? No, I can't see any double bottoms there. I just see sketchy price action. I can see some demand sort of in and around this zone, which, as long as it holds, I think you're okay. But the trend is changing here. I'm a little bit concerned about this one. If you haven't already, and there's so many reasons to have done so in the past, because yes, it was looking good through here, and I know we noted how good it was looking, but there's enough stuff going on here, if you hadn't already, to minus 1/3 on this to lighten the load. I don't think you want to be carrying a full position here, given that the trends are turning down. Okay, and certainly even there, that break is not good. And I would say if it closes beneath 32.36, so close less than 32.36 equals minus 1/3. Would be the next third there. Okay, let's keep moving. How are we going for time? Oh, we're nearly up on time. I'm going to do five more, the next 5, and then we're done for the session. And I know, because some people do get in late, I'm going to pick people who haven't been featured today and start from the bottom, work my way up. So Rapam, you're in now with CY5. Which I'm concerned about. You can see maybe the last time we spoke there, it was minus 1/3, and I think you're going another minus 1/3 here. And then if it breaks beneath this low here, it's all done and dusted. It will be a long time until you hear from this one again. So quite concerning, because it's done that building supply. So there's your POS. There's another POS featured there, and there's another POS there. So with the 3, I think you're starting to give up a little bit in this one, and you're seeing also the tide is turning on the short-term trend. Long-term trend is still up, so that's why you're holding sum of your position at this stage. Okay, working my way up the list, we're going to go to Woodside, which I know is super popular. That is a reflection of the crude oil price coming back. Natural gas prices came back. I still think it's okay in here, so I'm going to go a hold on this one. It's not a buy if you're new to the table here on Woodside. Not to say that it can't be if it starts to do stuff like this. And you can see this is just now the opposite of what I've been trying all day about getting out for getting in, because it's not your point of supply. That's an accident. Point of demand, and then when you're getting above this middle bit here, that's when you're looking to do your plus 1/3, okay, and only there. So I can go hold at this stage, but wouldn't be plus 1/3 until we see that scenario playing out. Looking to EVN, I've done. That's for you, Palm. Okay, Derek, you haven't done anything. A chart that you like, not one mentioned by us. I haven't done my scan yet today, Derek. Apologies, because I was away for 8 working days. I've had so much to catch up on today. I haven't done a scan yet, but I'll do one this afternoon for you, and I'll put the results on Twitter. Okay, so I'll do one of my shortlists and some feature charts for you, Derek, on Twitter this afternoon. From Ross, can I do RNU? I certainly can. What's going on here? Yeah, so what were we doing there? We're looking at for the candles in the point of supply to be concerned about. I think you can see the scratchings there. I'm just going to delete these. Okay. So you can see I've drawn, if you're not sure what's happened, you can see I've drawn my supply buddies in here. See, I've drawn them in here, saying, well, be careful for those in that zone. Did we see them? Not really. Didn't really see those explicitly in the zone. In fact, it's just been a very gentle pullback, even with those candles. I'm not so sure. This one's curious. This one's got me. It's got me stumped because it's unusual to see just this kind of nothing candles. This is quite normal in here, like to see that at the point of demand. A little bit concerned that we're going to close beneath this today. I don't want to see it happen. That low there, 27.5. So we close 27 or lower. Oh, such a mysterious decline. I mean, it's only mysterious in this is so strong, and then the reaction to this strong day is disappointing. And it's not mysterious in terms of, well, we knew the supply zone was up here. I mean, we knew that. We went into this eyes wide open. Disappointing. Look, kind of have to do this. Kind of have to go that, unfortunately, if it closes beneath it today, and still holding on the balance. So don't know. Sorry, I can't give you the definitive answer on everything all the time, unfortunately, because sometimes the charts don't allow me to do that. AIS, this one, Rupam. Now, you've already done a few, Rupam, so I'm going to go to Raju, who's Nufarm. Happy to hold that. No reason to sell at this stage. These candles are not sinister enough compared to the very clear. I love these white candles. These are amazing. So I'm a happy holder here. And could I buy? Let's just see one of those demand side buddies come in. So one of these with the lower shadow. And then 100% I could upgrade this to a buy on Nufarm. Okay, so happy to hold it in the meantime, and just really watching now and waiting for the next signal to add some more risk to this one, if you're not already on it, of course. But until then, it is a hold. So we're needing to see this in that zone there. Okay, let's do for Matthew VIP. I'm not sure if I've got the right one there, but yeah, I think it's yes. I think you know what I think about that one. For Warren MAY. Melbana Energy, look, showing signs of life. And remember what I said about Cygnus, and how if it was to close beneath that certain level, then it's probably lights out for a very long time. That's what happened to Melbana. I can certainly go a hold to upgrade this to a buy. We need to see again at the supply zone a strong hold with the demand side buddies in there, and highly contingent on it breaking back above this zone here. Look, I was about to say adding a third. No, I can't even add a third there, because this is going to be a supply zone as well. So from a raw to risk, probably not going to get it. I'm going to go pass on that one. Hold it if you've got it to see if you can get back to 9 cents and maybe get a better exit. If it can do the work at 9 and start to look better, maybe that's where I'm going to be involved, but not until then. Okay, let me just finish off here. I can see I've got a meeting starting there at Think Markets, the weekly meeting, so I'm going to be very naughty if I don't get there very soon. MFG, that's a no for me. So again, we talked, go review for you, Bharat. go and review the work I did earlier in the session on A2 milk, and that'll show you the type of turnaround chart that excites me. On AMP, we did a lot of work on that today, and this is not showing the signs yet. Not just to say that it can't start to do it soon, but I need to see the runs on the board before I get excited about this. And I'll be the first person to come out and say, hey, MFG, this thing's turning around. But I just think the trend is too well established, and the signs that supply is just dominant in the system, and demand is still after such a massive fall, unable to cope with that supply. I think it gives you great cause for concern. As far as buy, hold, sell, look, for me, hold is off the table. I'm still going to be in the sell camp here, and there's 0% I would apportion on the buy side of things. Okay, let us head back to here. And firstly, apologise to everybody if you didn't get your question answered today. But hey, there's lots of people out there that want to do it. We are doing in the early planning stages of doing more Ask the Experts in 2023 based upon popular demand. If you'd like to join me on the Zoom session, that's how you do it, www.thinkmarkets.com/au/webinars. If you're watching me on any of the streaming services post this event, then you can join me in these events. That's where I am. Okay, why Think Markets? We've got over 3,100 shares and ETFs to trade. If you're trading and investing for your self-managed super fund, $8 flat rate trade. It is HIN sponsored, CHESS sponsored. That's very important. You might be trading at a cheaper rate right now, but I bet you it's not HIN and CHESS sponsored, because I know we have the best rate there. The great thing about Think Markets is, in your same client portal, you can be trading for your self-managed super fund and also be trading CFDs on foreign exchange, indices, commodities, futures, crypto, and shares. So we talked about things like copper, like crude oil, natural gas. All of those things are tradable, including those big indices like the NASDAQ, the Dow Jones, and the S&P 500. We do have market-leading spreads and commission-free on all shares. We just won a couple of awards. I can't remember what they are, but we did win them. Because I saw the post on LinkedIn today and I thumbs upped it. We are an award-winning broker, and we keep winning those awards. That is not, you win one. I know there's a lot of brokers out there, they're award-winning, they won an award once. We are continuously winning awards for our platform, class trading apps, dedicated account manager, where you get to speak to a real person who'll get to know you and look after you through your trading journey, plus the support that I'll be able to give you as well. thinkmarkets.com/au to open an account. If you're watching me on any of the streaming services, please hit the subscribe button to stay notified of any of my future updates. They are coming thick and fast during the week. And it's really important as well, you hit the like button to let me and Think Markets know you like what I'm doing, so we can make sure we do more of it. Apart from that, it has been an absolute pleasure chatting with you today. All the best for your investing until we catch up again. Bye-bye for now.